Good morning, everyone. Can you guys hear and see me? Here, Stan is at with the hear and see. Thank you, Stan. Good morning, everyone. Okay, quick ground rules first. Please wait till the end before you ask your questions. And if you're going to ask a question toward the end, then please do so in a full English sentence and reference the specific chart and time frame. If I can't understand your question, I have to move on. If you're going to ask me if something is possible, don't bother. Assume the answer is yes. There are infinite possibilities. We're trying to figure out what is most probable. So without further ado, I'm going to put away the questions and let's begin. Daily chart on the SPX, ladies and gentlemen. We've got a cross on the MACD on the daily chart. This should signal, this should support our expectation that we are in a rally. We had the A wave, we had the B wave consolidation, which is likely done, and it could be done. Let me go back. It could be done. We're not sure yet. Today probably will answer if it's done or not, and I'll show you that on the ES chart. But potentially it could be done, and if it's not, we get one more pullback, and then we should be done. But overall, this is the A wave rally, this is a B wave consolidation, and then I'm expecting a C wave rally. After that C wave rally, that is where the rubber will meet the road. Depending on how the market pulls back after that C wave rally should tell us everything we need to know for the rest of this year and potentially a lot longer. The market pulls back correctively, then we have to switch gears and we're going to be looking higher for one more rally over the coming 6 months, 12 months. I don't know how long it's going to take, but it means that there's likely one more rally to be seen. And clearly it is not my preference at this time. It is merely an alternative, but I know what I'm looking for. Of course, the primary is that this is just a B wave and the market has already topped in its long-term trend. If this rally is a B wave, then the next decline is going to be a C wave. What we know about C waves is that they are 5-wave structures. If we see a clear 5-wave decline from wherever this tops out, ladies and gentlemen, then what that tells us is a corrective rally thereafter is a shorting opportunity for what can be a sizable decline. My target still remains 3,500 to 3,800. So this region over the next couple of months is going to be very, very key in determining, does the bull market continue on? Is the bull market actually done? Now, if the bull market is actually done and we get that C wave down, you're going to get one more, probably, I mean, I have this listed as just like half a year or so. It probably should last, I'm assuming, probably a year, maybe longer, but I think you'll probably see a sizable rally out of it, taking us right back to generally the region we're in now. And then at that point, that probably will be your last opportunity to sell your longs before the next major decline, which will likely break the 3,000 region. That is the bigger picture on monthly, ladies and gentlemen. That'll probably take us right back to the 2,000 region. Somewhere in here is my guesstimate. Okay. That's going to be the bigger crash. So that'll probably be close to what we saw in 2008 and 9. 2009. That would be probably similar in size. That was what, 1,500, 1,600. That was almost 1,000-point crash. If we go from 5,200, oh boy, yeah, that's a lot more actually. I'm sorry, that would be a lot more. This went from 1,600 down to 666. So, I mean, percentage-wise, this is probably larger, but it would assume we're going from 5,000 down to 2,000. So that would be a larger point number crash. So that's what I'm looking for over the coming years. But remember, we have to get the confirmation that we are going to drop down in the bigger A wave. So that's what we're going to be doing over the next few months, ladies and gentlemen. Okay, that's our next few months. On the smaller degree, let's take a look at the 60-minute chart, see if it shows us anything. Doesn't show us anything really other than we've bottomed where uptrends have bottomed before, and the MACD on the 60-minute has turned up. I am assuming we are in the C wave, depending on how it primary, is it a C wave? The alternative is that the B wave is still ongoing. Let me show you that difference here. Okay, primary, again, the SPX and the ES look differently. On the SPX, this looks like an ABC rally for an A wave, B wave pullback yesterday afternoon, and now we're in a C wave rally. The A equals C is right here at, hold on a second, let me this, at 54.74. As long as we hold below 54.74, I can view this as a D wave of the triangle. Oops, I have that up wrong. I can view it as the D wave of the triangle, which means we get an E wave pullback still. If we take out 54.74, or if we hit, well, we're close enough, but if we hit 54.74 or higher, and then pull back correctively and hold the pivot, then we're probably heading up much higher to 5,600 plus. The target, ideal target, is 56.86 on the ES. What is it, about a 40 or 50 point difference on the SPX? That puts us just north of 5,600. Probably the 618 retrace is 56.25, so about there. It'll be a lower end. If we go direct, then this is projecting to the lower end of our target. Okay, if we don't go direct and we get that B wave consolidation, it still leaves the door open for the upper end of our target. Okay, one way or another, we've been looking 5,600 plus on this rally. That's still my overall expectation. I think today will give us a good clue as to how that path is going to take us there. Okay, so this pivot is what you want to watch. If we break down below 53.78, the overnight low, it will open the door to this E wave pullback. Now remember, the E wave doesn't have to come all the way back there. Sometimes E waves actually truncate, and interestingly, E waves often feel like mini crashes. They're usually very sharp declines, or at least complete with sharp declines. So keep that in mind. As long as anything that we see sharp to the downside holds over this low, I'm still looking for 5,600 plus. IWM to me, I think, is really missing a lot of upside. I would expect it to get back to, I mean, we're not even at the 0.500, and I would expect it to get back to the 618 retrace. So let's see if the IWM really starts catching up. Right now, it's up almost 3% relative to the, it's kind of holding pace with the SPX right now. So I don't know. We'll see how that resolves, but I would expect the IWM to get back to at least the 618 based on how oversold it was, but we may only get to the 500, which is 500 is, second, yeah, 208. So we shall see. Right now we're at 192. Maybe we can push there. Okay. And then as far as EM is concerned, EM right now is at its 1.0 extension off the lows, ladies and gentlemen. If we can break out over 43.50, it gives me a much better indication that the EM is potentially much more bullish than the SPX. Okay, so we want to watch the EM take out the 43.45, 43.50 region post haste. If not, and we come back down below the 618 in this setup, well, that likely means that the EM is not going to be as bullish in the bigger picture as I would normally have expected. Okay, so EM is also at a key point. Metals. Let's talk about gold. It has been our favorite chart, and man, this thing has extended, huh? Well, at this point in time, we have already hit the bottom of our next target box on that last move higher. And to me, I think we are already in this wave 4. But I just want to really stress there is potential we have completed all of this already. And that's why I have the all top in here. We've hit all our targets and then some. So there is potential. We're going to have to wait to see how the market pulls back to here, and then we'll have to see the rally off of that. If we start seeing a corrective rally while silver is taking off, well, we may have to consider that gold may have topped before silver this time, whereas in 2011, silver topped 5 months before gold. Potentially could happen again, but just in reverse. So that's the way that looks. Let me show you the 60-minute on GLD. 60-minute on GLD. The retracement is really now pointing us towards, instead of the 255 region, because we had this massive extension, I'm probably looking about the 265, 266 region, which is the 0.618. I'm sorry, I apologize. That's the 0.382 retracement of wave 3. So we're probably going to come back down into this region. We have already broken down the initial support region, ladies and gentlemen. The next one we want to watch is 294. 294 is our next support below. Let me show you the way the micro looks here. There are two ways we're probably going to get down to that 294 region. Either this extension was just an extension of the A wave, or the A wave is here. We had an A, B, C down for a B wave, and now the market is trying to complete a C wave up for a B wave, or maybe it's a WXY. The main point right now, and by the way, it could be that this is all of the A and this is all of the B. That's also possible. So the main point right now is, if we break down below the 4, as soon as that happens, I think we are likely starting the C wave down. Okay, that's general area here, 3,100 and change. 294 is the next support on the SPX. So let's see how that develops. But to me, this is looking like we have our initial indications, micro indications, that a major top may have been struck. I need to see us breaking below the wave 4 low to make that a greater likelihood. Silver, and oh man. Now, silver still has potential to give us 5 up. Until that, and that, by the way, that 5 up would be as a leading diagonal. So until silver actually gives us that 5 up, ladies and gentlemen, I do have to somewhat lean towards the yellow count more. Really do. I'm not a fan of leading diagonals, and we don't even have that yet. So for now, I really have to somewhat view the even though it's more complex also, I have to look at the WXY path in yellow, lean a little bit more on that, even though neither are great paths right now, to be honest with you. As far as the GDX is concerned, could it have topped? Maybe. I need to see, I'm going to need to see 49 or 50. Between 49 to 50 is your micro support in NEM. I would really need to see that broken for me to have to reconsider this and maybe view this as a bigger B wave in this Y wave of the B wave in NEM. This does not look complete to me to the upside in NEM. Okay, which tells me GDX is likely not complete to the upside, but it is entirely possible. I'm gonna throw this out. This is the alternative I would track if we break 49.50, that we have an A, B, C, or even maybe a B wave triangle developing here before we finally get that final C wave up in NEM. And that would probably align with GDX. Hold on. Let me pull up my daily GDX. It would probably align with GDX getting your wave 4 here. Okay. And then a 5th wave higher high. So that's how I'm looking at this for now. But as you can see, I have already begun reducing my mining positions. Okay. Let's take a look at USO. USO on the daily. Now, take note, USO on the daily, the MACD on the daily has just begun to turn up. I have to, and that's off the support line. So I really do have to assume that this is just the start of a rally, and that rally would be a C wave of a bigger B wave. Interestingly, we have micro alignment and overlap at that 8660 region, which actually happens to be the A equals C point for this rally, an ideal target. So the question I have on the smaller degree is really my issue. Where's my USO on the smaller degree? My question comes down to, is this a 1-2, 1-2 that we're developing to break out to the upside, or already in the third wave? And I would probably have to use the 7240 region here as our resistance. If we take out 7240, I have to assume we're already in the third wave. Okay, so that's what I'm looking for. Otherwise, we still could see more of a consolidation in a bigger 1-2. We will watch how that develops. TLT, I know a lot of people are asking about, but I got a big problem with TLT. This 5-wave decline is causing a major problem. And that's why I had to add in the Alt A. This could be a 1-2 in a 5th wave lower low to complete a deeper A wave. A 5th wave of a 5th wave, actually. That is the potential here. Until we actually take out this high here, ladies and gentlemen, that is a concern of mine, with this rally just being a wave 2 in a 1-2 setup to the downside. So I'm going to be very cautious here, as this could be just setting up a much deeper completion to the A wave. Okay, so I'm very cautious of TLT. I am not trading it. I am not doing anything with it. I'm very cautious with it at the moment. Okay. Lastly, the dollar. The dollar on the monthly chart. I mean, this is picture perfect. We are in the top of our target box. And my expectation is, my primary view is that we're bottoming in wave 3 of the C wave. So unless I see a clear 5-wave rally off the low, I'm not so sure. This started maybe with a leading diagonal. I can't say that's the clearest of signals, but unless we get a clear 5-wave rally off the low, I'm going to assume this bounce is a 4th wave in the Z wave with a lower low to be seen. But in the bigger picture, guys, we have hit our target. And my expectation is I'm looking for a bigger 5-wave rally that takes us back up into this region here. Let's do it this way. We'll put in an ellipse just to give you an idea. So I'm looking for a 5-wave rally for wave 1 of 5, which means we're probably still going to be stuck in this region for some time, because we're still going to need to see a 1-2 take shape before we get the real breakout. Okay, so this is what I'm looking for, a setup for a multi-year rally in the dollar. Okay, so I think we're still going to be stuck in here. Again, potentially lower low for the C wave, 5 waves up, 3 waves back. So we should probably still be stuck in here for quite some time. So I've been through my analysis. Let's see if there's any quick questions. E waves are 3-wave moves. What is the upper limit of a wave 3? General targets are 2.0 extensions for all 5 waves. 1618 is the general target. Often share thoughts on Tesla. I'm following Zach and Garrett. The only difference that I have on Tesla is the next higher highs I'm viewing as the completion of the long-term path. I'm not looking at it as a C wave of 3 like Zach is. I think that's a little too a little too much for me. I just showed you the 144 on silver. The weekly doesn't change, Richard. The weekly is still the same. You're not going to get a difference in the weekly from week to week. Weeklies take a long time to change. No difference on the weekly. They take a long time to change. What will be the next attractive buying opportunity in GLD after the pullback? Already discussed. Okay. At date of listing of fry pan. I don't understand what that means. Any other questions, ladies and gentlemen? Okie dokie. I'll catch you guys in the room. Have a great day today.